Vincenzo's Gold Crypto Investing this October, the 22nd, 2025, I believe. Cryptocurrency, gold, and silver bullion video that you've come to expect, love, need, and deserve. That has been here for free and will continue to be here for free, but we are a little delayed today because we had to drive stuff for the current establishment that we work at, but things are shaking, moving parts are moving, and old Vincenzo feels things changing in the near future, as we call it. Like we always tell you, to be prepared, to have a good standard of living with some cash on the side, some investments, some real estate, right? Stay out of debt, no debt, zero debt. So that way you have mobility in your life when things have to change. And if you have to change things on a dime, you are able to change things on a dime because you aren't dependent on such factors to keep momentum in life moving, if you understand what I'm saying. And you can afford to miss some of the fuel for a few weeks or months or a year or whatever and decide what's best for you to move forward. And that's where Old Vincenzo's at right now. So the video is coming out a little bit late this evening, but bell notification, comment down below. I appreciate each and every one of you, and we'll continue to update you on my journey in life as we make career decisions and lifestyle changes for our financial future, right? But what we're looking at with the Bitcoin price, which you guys are all here for, and I appreciate you and I love you all, is we're sitting here at the 200-day moving average at 108,014.58. And like we were talking about after we had the great dump, and the great dump that we're speaking of was the great dump of 2 Fridays ago, where we had a capitulation, a local capitulation from 126,000 and change, all the way down to just below the 200-day moving average on a wick, the old wick, down to about 103,000 even. And then we had the reactionary textbook playbook bounce back buyback to the 50-day moving average on a wick that we're going to highlight right there. You see that? We highlighted that and we wicked up to it at 114 and change. And then we quickly got rejected, something that we were talking about and something that we thought was more than likely plausible, not possible, but plausible to happen there. And that's what happened there. And now we're sitting on the 200-day moving average, and you can see in the dotted red lines just above the 200-day moving average. And we're either A, over the next 14 days, going to do this. And Old Vincenzo is going to give you some clarity here, as our clarity in our life is not as clear as it's been. But the clarity in this chart would be option A is you get above the 200 that you're above now, you stay above it, you breach the 50 and compressing 100-day moving average, and then you rocket your way up near upper resistance and you attempt to break back into this upper resistance, this 3.5 year pattern that you've been in ever since the Great Dump. And the Great Dump was the mountain double top here of the COVID capitulation from the 2019 to the 2021 first top to the 2021 into 2022 bear market, late 2021, and then in the 2020, late 2021 into the beginning and middle of 2022 rally, and then the capitulation and the mountain double top there, right? And then you've been in this rising channel ever since, which is like a conveyor belt that has a bearish capitulation at the top. And if you do capitulate out of the top, the bearish signature would be coming down and not being able to sustain and or break the 50 and the 100-day moving average. You end up down here at the 95,000, which is a pattern support, followed by a little bounce back. And then you end up down here at this critical underneath major support level, which is the 79,000 and change, which would be the 100-day moving average in the Bitcoin price in the weekly time frame, as the 95,000 is the weekly time frame 50-day moving average, right? And that would be a critical pattern support as micro strategies break even prices near 70 to 74,000. I am not a financial advisor. I would never pay to buy or sell anything. These are only my personal opinions on the market. If we look at our Ethereum price, you can see we're consolidating with a bearish undertone and overtone moving averages where the 50 is drastically declining, the 100 is running parallel to slightly declining, and the 200 is running almost parallel now. And you are confirmed below the 4102 neckline resistance because you're below it. You can see right here on the neckline resistance, you hit this beautifully and tanked, and that would confirm a breakdown. And that would bring the 3468 because I don't believe the 3579 200-day moving average in the daily would hold. And then I believe ultimately, I think in the short term, I think this is where honestly you're going is the 3068.82. Even though the rate cuts are coming, bearish and bullish sentiment is there for the dollar being devalued. I think in the short term, the next couple of months, the next month, the next couple of weeks. I think we're coming down here. Do we have to come down there? No. Could we turn this around and breach above the 100-day moving average, the 50-day moving average, and the horizontal neckline, megaphone neckline resistance? Yes. And that's what you would have to do to turn this bullish. But I think we're going into an intermediate bearish cycle here where we're going to have a little bit more capitulation to the downside, sucking in a more liquidity, sucking out a little more leverage before the pump, before the plateau of the new all-time high set in 2026, 2027. If we look at the XRP price, you can see we're sitting here beautifully on a freshly minted bearish cross where the 50 has got below. You can hear my dinner time coming. Got below the 100. The 200-day moving average is running parallel. The price action is significantly below that, sitting just above in the red dotted line, the 233 50-day moving average in the weekly. And just like we told you this whole week and last week and the week before and the week before, if you break this, you're coming back down to the 100-day moving average in the weekly time frame, which is at $1.77. If you want to avert that, you must hold this area that you're at now, and you must go into the green path. And the green path is to go and attack and break down the 200-day moving average in the daily at 261. Get above that, re-attack the 270, get above that, get above the 100-day moving average at 275, and eventually try to make a run at the $3 mark, right? But if you don't do that, we have some very, very, very bearish action that I believe could be plausible, if not possible, coming up in the short to medium term, right? And that's what I'm going to be looking at. If you do not break this recent big flush there from 2 Fridays ago, you can see the big red candlestick. I told you, is this a quick flush out leverage liquidation or question mark, was this a overall structural change in the market? And there was a reason that I made that video and that headline, because this could be a change in the overall structure in the market, and the market could turn bearish and the liquidity could dry up, and it could dry up very quickly. And that's something that you guys should have been paying attention to on the last 2 Fridays ago dump. And uh, prior dumps over the prior half a decade since I've been on here talking to you. Not saying that that's going to happen, but saying that's something that when you have a thin liquidity market, you can lose 80 or 90% of your investment in the matter of a few hours. And you have to have that. The XLM, you're sitting at a strategic price of 31 cents just below. If you can't get back above that 50-day moving average in the weekly time frame, you're going down to the 25 cents, which is the weekly time frame moving average, and eventually potentially as low as 21 cents or the wick bottom, because this is the liquidity that I was talking about. There's the lack of liquidity where in the matter of an hour you went down on the wick 58.72% because of lack of liquidity. And that must lead you to question, can I leave my capital in something that long, years, months, years, half decades, decades, if you can lose 58, 60% in the matter of an hour because of lack of liquidity? That's a problem. That's a concern to me. And that's the reason I am not heavily invested in crypto, right? And I am heavily invested in gold and silver and mining stocks, because the mining stocks themselves, the companies themselves, produce a commodity, produce a precious metal that the country, the world, and consumers and people need to live. They produce gold and silver bullion, nickel, copper, all of that kind of stuff, palladium, platinum, rare earth minerals and metals that are needed for power, electricity, micro a business, and modern life as we know it, right? And that's the kind of things that I invest in because they actually have a floor, they have earnings, they have a product, they have a need, they have a solution, they have a answer to problems that people need on a daily basis, right? Silver bullion, right? It's in all your electronics. It's a very good conductor of electricity. Copper, same thing. Gold, same thing, right? They all have a strategic place in this environment and in this world, and cryptocurrencies can drop at the drop of a hat because it's just a digital computer a number on a screen. And that's all I'm trying to say here. I'm not trying to say that they're useless. I'm just trying to say you have to be worried about something that can drop 50 to 90% in the matter of an hour due to lack of liquidity because it's just a number on a computer screen. This is old Vincenzo signing off for this evening. Peace and love as my journey in life continues to be an asset millionaire as we risk everything on ourselves. And that's the best advice I can give you. Gamble, not on somebody else. If you're going to make a gamble, not saying gambling's good, but if you're going to gamble, gamble on yourself. Peace and love. Signing off till tomorrow. Till Rock Bro, Jay.